Portfolio Builder members, welcome to your Wednesday update. Today we did a $3 wide option caller on the SPY, and thankfully the put option and call option are both up, delivering profits even though we're down a little bit on the SPY. Meanwhile, the TLT is headed higher as well as GDX, and we're short emerging markets, which almost surely will drop significantly next week when China's stock market opens back up. The big headline today was Fed minutes, at least their policy changes. They believe their minutes will be released tomorrow. And of course, the critical Q&A, so you can get inside the head of Jerome Powell. So what did I pick up? Well, he didn't say this explicitly, but he did insinuate that this was what they were leaning towards, which is repo infinitely and repo indefinitely. So they do believe that the demand for repo will die down as they continue to purchase treasuries through Q2. So we have until the 6th month of 2020 to expect that the Fed will be picking up U.S. debt, at least on the front end of the curve. I'll be interested to see if they've done any other purchases on any other parts of the curve on the H1 for release, or rather H41 release tomorrow at the market close. So what implications does that have if the Fed's going to keep rates steady for now, one, and then two, are currently indicating that they want to do repo indefinitely and have not yet committed to stopping asset purchases in 6 months. They've just committed to purchasing for 6 months. So from my perspective, that does mean they want the balance sheet to slowly grow, although this might start happening much slower than we've seen in the past 3 months, as we've already seen the trend in January. So that's one. Two, repo is very beneficial to anyone who owns treasuries. So that could be why we're seeing such a big bid on U.S. treasuries, because you can use that as collateral and have what I call a sweetheart double payday. So if you're a primary dealer and you pick up U.S. Treasury debt, then you turn around and hand it over to the Fed's repo. Well, they're going to hold that for you and give you a cash loan at a low interest rate. So if you can then turn around and reloan that money for a profit, you now have twice the buying power in your balance sheet. And if you did believe that in the long term that yields are headed lower, then you would expect you have a double payday. You're going to get interest from your treasury. You're going to get a cash loan equal to the size of the value of your treasury to flip a profit on, loaning to hedge funds and anyone else in the overnight markets. Plus, if you wait long enough, because yields are likely to head lower, then you can flip that treasury for a large profit later down the road. So you can see why repo indefinitely and infinitely is very bullish for the bond market. And in general, this means that the supply of dollars could dramatically expand in 2020. So you can see that GDX popped up 2% gold, and the TLT popped up 1% today. Emerging markets is up a little bit, although I do suspect they have trouble ahead based on the coronavirus. I'm not going to spend a whole lot of time on that today. I know we've been obsessing about it since Friday, and I do suspect there's some key news tomorrow when the WHO potentially elevates this to an international crisis. So do look out for potential boot camp trade alert tomorrow morning, hopefully before that announcement spoops markets. But my concern is by Friday or Monday at the latest, the coronavirus will be clearly back into expansion mode. And you can see the stock market didn't crash because of this news, but there's a big bid on the bond market. And I think that's from one, China having a slowdown due to the coronavirus, and then two, the Fed indicating that, again, they might keep repo going indefinitely and potentially infinitely in size. LQD, the investment grade corporate bond ETF, didn't mind the news much, which means corporations can keep borrowing at cheap rates and buy back their own stocks. So at this point, the announcement from the Fed does not make me want to short the S&P 500. Facebook had some bad earnings. It's down 8%. I believe Microsoft had another very strong print. Apple is, of course, having record sales. But I think it's really the coronavirus spreading that will be the big panic button for the stock market in the short term. Now, HYG is your high yield / junk bond ETF. And you can see that it didn't like the news as much. And again, I do believe in terms of looking for a protracted sell-off in equities without the Fed raising interest rates, we'd really need to see this ETF tank. And that would represent your high yield corporate debt becoming more and more expensive to borrow, and thus start to really eat away at your Russell 2000 companies. And once we see a big separation in the Russell 2000 from the S&P 500, I believe we'll have some pretty serious alarm bells going off in the equities market. Now, you think with the expansion of the money supply, the dollar would be having a fit. It's still above our $98 line in the sand to believe that emerging markets are doing well. And again, with the China being shut down, the coronavirus spreading rapidly, I believe that China is going to have some trouble in the coming weeks, maybe months ahead. So we'll continue to be short emerging markets. And again, long U.S. products, so long as the dollar shows such tremendous strength, which I suspect it will continue to do so as the government's now selling its debt easily to foreigners as they watch this crisis unfold in Asia. And a final note on the Fed meeting. He continues to hint that they've been reevaluating the best strategy for creating inflation, insinuating that the current model of just changing interest rate policy and purchasing U.S. debts and mortgage-backed securities is not the best role to or method to achieve their targets. So it's not clear what exactly they do intend to do that could be better. And a quote I'll pull off the top of my head from the meeting was that their policy tools are blunt but powerful. And isn't that the truth? Okay, some more headlines. The big narrative being pushed at Davos with Christine Lagarde. It even came up but wasn't really entertained today. Was this whole idea of protecting the environment, spending a lot of government money to remove carbon emissions. And so all of that sort of talk is generally very bullish for Tesla. But you got to wonder, how's their stock going to perform if China has a dramatic slowdown where a lot of their demand is based? Now, so far, this is the first top dog company in the SPY ETF that I've seen some weakness in terms of earnings so far in 2020. In this headline, not so subtle cover-up from 0 to 50 Iran attack injuries in under 3 weeks. There continues to be missile attacks on U.S. embassies and as well on Aramco. So I do think this is heating up, but it does show that Trump is trying at his best to reduce geopolitical tensions going into the election, which would make sense. Microsoft's earnings came in very good, and this is again the number one position in the SPY. So we have number one and number two doing very well, Microsoft and Apple. Both Google and now Facebook have announced they're shutting down their offices temporarily in China, which is funny because their products and services are banned in China. So I guess potentially just some cheap labor. Here's an interesting headline which I will be deep diving into. I like to listen to Steve Bannon's War Room, which happens twice a day. I can't listen to both every day, but they do seem to have the best inside scoop, as well as predictions on the timeline of all of this, and so far they've been quite accurate. But yesterday they were saying that McConnell didn't have the votes. Today they say they do. So this is interesting. We'll see whether or not we have witnesses or not. I believe we should know this by Friday and perhaps Monday at the latest. This is a funny comment from Zero. Remember when the repo crisis was a one-time event due to a tax payment or something? Apparently it'll last at least through April. The wording I heard was through Q2. And he pretty much said that they're going to open it up to be permanent so that it's just available to help reduce volatility shocks. And if, again, this becomes a crutch, we can expect banks to load up on treasuries and then take advantage of that by putting them in repo, essentially giving them a double line of credit. Coronavirus chaos forces Starbucks to shut down half of its stores in China. We have some public threats to John Bolton now about his book and about potentially blocking him if they do call witnesses, which could delay the process of the impeachment. More than 100 people across 26 states are being monitored for possible cases of the new coronavirus. Health officials said Monday the number of possible cases of the dangerous virus nearly doubled to 110 cases over 4 days, up from 63 previously reported, supposedly in 36 states now. My doctor's appointment, which I rescheduled so I could make this video, was actually very concerned about coronavirus and asking me all sorts of questions on the phone. And that's out here in Albuquerque. So there may be some headlines hitting in the near future. And in fact, the Fed was even scared about the coronavirus in terms of China being impacted by it. And we've got a new risk, and that is Bernie Sanders. He is really dominating the Iowa caucus preference right now. And Joe Biden continues to slip. Article at the New York Post, and essentially prediction that we will have a vote on Friday about the witnesses, and if the Democrats fail to get 4 Republicans to flip, the trial could be over potentially next week. Otherwise, it may extend all the way into March. All right, guys, this will be our last article. Reporters claim they have proof China lying about virus death toll. Essentially, several epidemiologists have suggested that many of the deaths caused by the coronavirus that surfaced in Wuhan last month have slipped through the cracks, either having been misdiagnosed or deliberately attributed to something else. Many suspect that Beijing is concealing the true extent of the outbreak, and now one reporter claims that a Chinese media organization has found proof. The East Asia correspondent for DW cited reports in a tweet claiming that officials have been secretly moving some bodies directly from the hospital to the crematorium. Also, one thing that China is hiding is the number of deaths caused by the virus. Credible Chinese media outlet Intinium News interviewed people working at local cremation centers, confirming that many dead bodies were sent directly from the hospitals to the cremation centers without properly identifying these patients, which means there are patients who died from the virus, but not adding to the official record. This shows the current death toll of 133 that we are seeing is way too low. There are reasons to remain skeptical about what China has been sharing with the world. because while they have been more transparent about certain things related to the virus, they continue to be sketchy and unreliable in other aspects. The latest clinical report on the 2019 novel coronavirus, 99 patients from Wuhan into the Jiantan Hospital, important a key group of patients progress rapidly to ARDS, septic shock, and multiple organ failure. 23 ITU admissions, 17% ARDS, 11% mortality. So the death rate could be much worse than they are letting anyone know. Meanwhile, Russia is the latest country to partially restrict travel with China. Russia Newswire Interfax reports that Russia has ordered the closure of some of its rail links with its close geopolitical ally, and that begins Friday. During a press conference, President Xi is mentioned by President Trump that they have spoken directly about the coronavirus outbreak. And so that is a wrap. To summarize our positions, if you're just following the program with buy and hold, we have a very protected position on the SPY with our options portfolio. But if you're just following the program, you'd still be long the SPY in a equal proportion to your TLT position, which we're also long. Now in our option program, we're just naked long TLT and GDX. We'll be trading those positions Thursday. Go back to our core list. Meanwhile, we're also long GDX and we're short emerging markets. The only way to get that same positioning without using the inverted option collar is to buy the Yang ETF. And again, our ratio is 1 share of the SPY, 2 shares of emerging markets, 2 shares of TLT, and then 2 shares of GDX. Keep the 1-to-2 ratio, and you're going to be doing very close returns to what we have in our portfolio. So thanks again for your time. Looking forward to having you all live on our webinar tomorrow. And again, tomorrow evening, we'll look at the Fed's balance sheet. Would not be surprised if it did reduce in size once again, although I would still suspect they're buying an awful lot of the front end of the Treasury curve. Okay, guys, thanks. Talk to you tomorrow.